Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 13th. Friday the 13th. Watch out if you're superstitious. It's Friday the 13th, um, episode number 1879. I lost my train of thought there for a second. Some really sophisticated thinking there. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that is in a risk on stance. The ES actually tested yesterday's high almost to the tick. Yesterday's pre open high almost to the tick at 35.69. That's hmm, the 12th. I see it. I see your 12th, and I shall fix it. I shall fix it. Good call. There. Is it fixed now? Should be fixed. Thanks for that. Um, so here we stand this morning. We have moved from the lower distribution of yesterday's ES to the upper distribution. The market's in a risk-on mode, but the leader again is gold. Gold has really clawed itself back towards 1900 after getting hit after the election. Gold took a big drop earlier in the week, trading currently at 1893.90, 1893.90, up $20, another $20.60 from yesterday's settlement, up a 1.1%. The Russell is trading another 13.8 points up. Russell is at 1721.20, up 0.81. The Dow's up 228 this morning. And the S&P is up 25 points or 0.7%. Pretty much everything is up from settlement one way or another. The 10-year notes up only half a tick, and the bonds are up 3 ticks, with crude oil being weak this morning. Crude's trading at 40.73, down 39 cents or 0.95%. That's the WTI December contract. So not much further to look at there, except that the market's allocating to risk. However, we are still in balance. We're still in balance and still holding sideways. Overall, the market sentiment this morning is we're higher. The summary is that we're higher as President-elect Joe Biden was projected to win the battleground state of Arizona, though investors remain cautious as many states imposed restrictions to curb the rising coronavirus cases. European shares were mixed, while Japan's Nikkei snapped its 8-day winning streak. The dollar index slipped as worries about the economic fallout from the pandemic tempered initial enthusiasm about a possible vaccine, while gold prices were up. There are some new restrictions being imposed in the Chicago area. They're starting to enforce travel bans to neighboring states. If you go to Iowa or Ohio, you're required by law to quarantine for 14 days. The cases have been spiking, and that's giving the market some jitters still. And so that's what we're having to deal with. Also, Germany, France, UK locking down as well. So the market's kind of anticipating that that's going to have an impact on earnings and overall activity. So that's what we have to deal with. Do you hear my cat? Do you guys hear my cat? Because she's got something to say. She's really. She loves to scream in the background when I'm in my trader bite. She's very, very quiet until the trader bite starts, and then she starts screaming. I think my voice is causing her to feel tortured. So anyway, again, happy Friday, everybody. So looking at the calendar this morning, we got GDP growth out of the Eurozone, came in at 12.6% Q on Q versus 12.7, pretty good. The GDP growth rate in the EU year on year is contracting. Recessionary at 4.4% draw versus a negative 4.3. And then for the rest of the day, there's a lot going on today, but nothing super high tier. Feds Williams spoke, Feds Bullard speaking. And then we're looking at Michigan sentiment coming out at 10 o'clock. And it's Michigan sentiment. This prelim can be a mover. Be careful with this one. It's not like the final. So at 10 o'clock, I anticipate a little bit of volatility on that number. So if you have a position on, be careful. Fed's Harker comes on at 10:05 Eastern. And then we finish up with Bank of England's Governor Bailey at 11. That's it for the calendar. Really, there's not much here to fret about. In terms of expectations yesterday, the primary expectation is we are likely to push into that 69 area and then turn over and explore down. And I was looking for it to get down into the 2250. So a turn up and then for it to turn down. Here's what we got yesterday. A turn up and a turn down. The push higher yesterday was expected to go up to around 69. That was the high before the open. A lot of trading went off there. Before the market turned over. And it couldn't quite get there. It stopped at 65. And from there, it pushed to the other side. You know, it extended the IB, pushed to the other side. And look at this beautiful retest of the prior point of control, mid VWAP, all kind of mushed together in there. And then we finally get this sprint down. This was a really nice setup here. Pull back to the IB low, and then we continue down even stronger, down to 35.25. Didn't quite get to the 2250. Remember, 2250 is what we're after on the downside on scenario one. I talked yesterday about what is likely to lead up to a rotation down on scenario one. So if you want to see that, you need to go to yesterday's video, which was the 12th, which was actually the 12th, not the fake 12th that I put in today. And finally, if you're hanging on, finally got the 22 down here. That's last week's high. And then it consolidated and bounced back up. Couldn't quite make it to mid. Came right back, and this became noisy to me. This started to look pretty noisy, and at this point I was in a webinar anyway. And then it continued to extend lower. The next area down was what? What was the next area down? Anybody? I can't wait for you. You're delayed 15 seconds. The next area down was 0650, 0650, 05, right? 05 even is a stock zone. That's the big area down that I outlined yesterday. I believe I put it on here. There it is. 05 right there. So was looking for that to be the continuation play, but what it did is it put in a higher low from 13 to 14 higher low, and then we have the end of day run into the close. We closed right on top of mid and VWAP. Quite an orderly market, but what we did is we extended the range down, and the one-time framing has now started to trigger to the downside on the day session potentially. We'll see how it behaves today, but if we put in a lower high and continue, it doesn't have to put in a lower low. We are likely to see some one-time framing down, and coming into Friday, that's not a great thing because we have a higher low, higher high on the weekly. So the weekly time frame is one-time framing up, but then it'll start us out next week with a lower low. We need to keep a higher low for the one-time framing to continue. So I'm expecting today that the 0650, I mean, we're a lot higher than that. The 0650 is likely to be defended. I'm expecting this to continue higher today as we basically covered the entire week's range between Monday and Tuesday. Between Monday and Tuesday, I expect us to push into 90 today, or in the direction of 90 today from the current 55.54. We have 69 as resistance now, but the expectation is for it to push higher. Note that as we made a higher high, the delta is not with us. As we're trading sideways here, the delta is actually losing traction. The market seems overextended, and it makes sense because we made new all-time highs earlier in the week on the RTH session at 36.45.25 on the Pfizer BioNTech news. So we're kind of resting up here, but the overall push is bullish, and I talked about earlier in the week that we are likely to squeeze a little bit, squeeze the shorts Tuesday, Wednesday, and then yesterday was quite weak, and we foresaw that it was weak. That was the primary scenario. So where does that leave us for today? So what are we looking at here? We had this nice sell-off, beautiful impulse down, pullback, look for the pullback continuation to 22, push to 2250, pullback continuation to 0650, 05. Couldn't get there, went to 13 and climbed back up to finish at the mid. We finished yesterday at the low volume node or the low volume zone, and then overnight we test the edge of that low volume zone and then come right back to the high volume area below. Find buyers again, and then we run and then see this slip right through this low volume node. That's very, very common. Push to the upper distribution, right? This is a double distribution profile. Push to the upper distribution, then rest here. The point of control yesterday remained at 35.53.50, and guess what? This is where we are today. We extend just above yesterday's high, but we fall back in, and what we have is an overnight session with a point of control that's right on top of yesterday's point of control. We're opening in the upper distribution, and the line in the sand for me is going to be this zone here, which is not so clear. It's somewhere between 50, 45, and it might go down all the way down to 36 or so. It's just not a very clear zone. But this box right here is likely to be protected today by buyers if we want to see continuation higher. If we get into the box and come out the other side, then we know that we are likely to retest the lower distribution of yesterday. So we want to hold down into the 27 area from about 43 or so. And those are the kind of setups I'm looking for today. So that's where we stand. We are very, very close to squeezing through this quick push area from Monday. This is the key day of the week. We are likely to continue to squeeze higher into 81 to fill in the single prints, and then to start working ourselves into the 90, 92, 94, and 3600. This is the expected rotation for today. We are going into the weekend, and there's still some political uncertainty here in the U.S. I'm not going to talk about it. Too many people here get too sensitive. But overall, there's a little bit of uncertainty here. But coming into the session, the market seems to be fighting off the selling below the 35.40 area. So that's what we're coming into. In terms of what's expected for today, let's turn on the stock zone levels. All right, so here's what we're expecting today. Coming into the session, again, it's very clear that the market's rejecting prices down below, we still want to talk about this box right here, okay, which carries over from yesterday. And so if you recall, yesterday I was looking for the 69. We went to 65. That's the 65, right? And we are back up here. So the question you have to ask yourself is, if the 69, which was tested before the market, if the 69 is too expensive and therefore the market sold off, what are we doing back up here? We should not be back up here. We should not have come back up here. But because we came back up here, we now have a weak high, right? It's a weak high because if it were a strong high, it would have been an excess high, and we would have sold off from here very, very quickly because it's an excess high. It's too expensive. Remember that example with the beer bottle from a few weeks ago, right? The beer here is if it's so expensive, why are prices coming back up here, and why is trading occurring at these high prices? It's because that expensive price is becoming more acceptable. Kind of like your real estate taxes, your property taxes. We just fret about it, but we accept it over time. So the expectation this morning, since we're opening in this upper distribution, is we are likely to open in range in an open auction. I'm expecting this to, because the inventory is, the inventory is somewhat balanced. I expect us to test into the 47, 48 stock zone, and I'm looking for an impulse higher at some point that would take us into the 69 and then finally blast through and push the next area up, which is 75, and then finally close these single prints and potentially push into 92. So what's important here? What's important is 69, 70, 75. Then we're looking at 81, 92, and then this is a series here. These are all old measured moves. 92, 94, 90, 92, 94. So let's put that here, 90 and 94. My mouse is not operating properly, even though it's a pretty cool gaming mouse. And then 36, the double O. These are the areas to watch out for. So I'm expecting some action here. I'm expecting some action here. I'm expecting in the 81 a reaction there, and for the market to continue to squeeze, right? And as long as the market squeezes and breaks, the stops moves up here, it squeezes and breaks, the stop moves below the point of control of this consolidation, it squeezes higher, moves the stop, and that's the goal, is to not only catch a trade, but catch a trade and ride the living crap out of it. That's really what we're after, because you can find a trade. There are always places to trade. Like anybody here can invent a trade, right? The issue is not finding a trade. The issue is hanging on to one. The secondary is an open auction that squeezes higher, pushes towards the 69, gets us up above the 69, unable to hold on. We get sellers, again, same sellers that pushed here, We get sellers, we get an impulse back down towards the overnight point of control, consolidate here, and then start attacking this area. I'm not expecting it to push much further. I'm looking for it to kind of bounce and remain in range, giving us a higher high, higher low, and a completion to today's session with consolidations at the 55 area, the 45 area, the 45, 48 area, and then again down here at the 38, 39, the bottom of this range. This is what I'm looking for on the secondary. Okay, this is not just theory and fantasy. I'm not just drawing lines on here because I'm fantasizing about how the market's going to trade. This is really important planning. This is basically strategy for how price might move What the market does, it does. I don't have any qualms with the market or issues with the market doing what it does, but I'm going to be prepared for when it pushes or tries to test these areas. And based on the reaction, I know that once I catch something, especially if it's an impulse, then I need to just ride it out. Okay, that's what gives us a good R factor or risk return, and makes up for a lot of little losses and keeps us in business, in my opinion. Okay, it is like Friday. If you take a moment and hit the like button before you head out, that would be very helpful. Of course, tell your friends, tell your buddies, your trading buddies, your Discord channel, whatever. Tell them about this broadcast. And of course, as always, check out edgeclear.com and convergenttrading.com. These are companies that I have founded. EdgeClear being the brokerage. We are releasing some tech here shortly, which I think will make things a lot easier for traders to just focus on trading as opposed to on their technology and clearing and commissions and all that nonsense. And then with Convergent, of course, we continue to have the discussion there. And yesterday we did a webinar, our psychology session for the month, and I covered meditation, and we did a group meditation for 2 minutes. I felt that was a lot of fun. Been meditating for 22 years or so, and felt that it made a big difference for me as a trader, so we covered it yesterday. If you're a member, please make sure you go watch that video. I know it sounds like frou-frou, but really meditation makes a huge difference. Good luck, and I'll catch you on Monday. Stay healthy and safe over the weekend, and stay away from COVID. Take care, everyone.